Today, I am Reina Flor Bondoc.
And I'm Luv Patriz Aukay.
And today, we will discuss Chapter 10 of Intermediate Accounting 2, which is Lessee Accounting and its basic principles.
In this topic, we will know the optional application of operating lease on the part of lessee, recognize a right-of-use asset and lease liability in a finance lease, understand the measurement of a right-to-use asset, and understand the measurement of a lease liability of a finance lease.
Let's start with the definition of lease. According to IFRS 16 Appendix A lease is defined a contract or part of a contract that conveys the right to use of the underlying asset for a period of time in exchange for consideration. Appendix B9 provides that to be a lease, a contract must convey the right to control the use of an identified asset. Before we proceed to our comprehensive discussion, we must first know who are the parties involved here in this chapter. First, we have the lessor. The lessor provides. Next, we have the lessee. The lessee obtains. Ano ba yung pino-provide ni lessor na ino-obtain naman ni lessee? Ito ay yung underlying asset. Going back to our definition, himay-himayin natin each word for us to understand more. Ano nga ba yung lease? Alright, so a lease is defined as contract or part of contract. Going back to our obligations and contracts na subject, a contract is defined as meeting of minds between two persons. Ibig sabihin, sa lease ay merong contract sa pagitan ng dalawang tao. Ano ba yung dalawang tao na tinutukoy dito? Ito yung define natin na lessor and the lessee. It doesn't necessarily mean na kapag merong right of use si lessee na gamitin itong asset na pinrovide ni lessor, ay pwede niya na itong gamitin panghabang buhay. Ibig sabihin, right of use lang yung meron siya for a period of time. Kailangan niya itong ibalik kay lessor. Ano yung reason kung bakit nag-provide si lessor para kay lessee na ang underlying asset para i-obtain or gamitin ito for a period of time? Going back sa ating definition, in exchange for consideration. Ano yung exchange for consideration na tinutukoy dito? Ito yung payment na ibibigay ni lessee kay lessor kasi nirentahan niya yung asset na ito or nagkaroon siya ng right of use dito. Ayan, right to control the use of an asset. Just like what I have mentioned in our previous slide, may right of use si lessee dito sa underlying asset na pinrovide ni lessor. This is to obtain substantially all the economic benefits from the use of the identified asset, meaning direct use of the identified asset. Ibig sabihin, kapag merong right of use, si lessee ay pwede niyang gawin kung ano yung gusto niyang gawin sa asset na nirentahan niya. Ibig sabihin, hindi na siya pag-aari ni lessor kahit anong gawin niya for a period of time kung kailan niya ito nirentahan. In accounting for lessee, there are actually two models. The first one is the finance lease model, and the second one is the operating lease model. Finance lease model for lessee, as stated in IFRS 16, paragraph 22, at the commencement date, a lessee shall recognize a right to use asset and a lease liability. A lessee is required to initially recognize a right of use asset for the right to use the underlying asset over the lease term and the lease liability for the obligation to make payments. In layman's term, itong finance lease model is para siyang rent to own. Ibig sabihin, there is an actual transfer of ownership after that given period of time. So, magbigay tayo ng example. For example, is yung bahay. Ang given period time natin is 10 years. So, huhulugan mo ito either monthly or annually. So, after mong ma-fulfill yung given period na yon na nakapagbayad ka in 10 years na yon, after that year is mapapasayo or merong ownership ka na dun sa asset na yon or sa bahay na yon. So, ganun yung tinutukoy dito sa finance lease model. Also, on the new lease standard, sinabi dito na this finance lease model, by default, all lease shall be accounted for this model. Ibig sabihin, ito na yung default, ito yung kailangan. The other model is the operating lease model for lessee. In layman's term, kung yung finance model is rent to own, itong operating lease naman is purely rent lang. Okay, balik tayo sa example natin kanina. Yung example natin is yung bahay na huhulugan mo for a given period of time of 10 years. So, dito sa operating lease, after 10 years, there is no transfer of ownership. So, ibig sabihin, rent lang, hindi yun mapapasayo, pero babayaran mo siya at hindi installment yung bayad mo dito. IFRS 16 provides that a lessee is permitted to make an accounting policy election to apply the operating lease accounting and not recognize an asset and lease liability in two optional exemption. What are these two optional exemption? The first one is the short-term lease and the next one is the low-value lease. Okay, later in our succeeding slides, we will discuss ano yung pinagkaiba ng dalawa na to. Short-term lease, ito naman yung isa sa two optional exemption natin sa operating lease. Okay, it is a lease with a term of 12 months or less at the commencement date of the lease. The election of short-term lease shall be made by class of underlying asset. Next is the low-value lease. How do we know if ang isang asset is low-value lease siya? Okay, there is no threshold and a matter of professional judgment, or in layman's term, a matter of common sense. It is also made on lease-by-lease basis. A lessee shall assess the value of an underlying asset based on the value of the asset when it is new, regardless of the age of the asset being leased. A lease of an underlying asset does not qualify as low-value lease if the nature of the asset is such that asset is typically not a low value when new. The question is, bakit optional lang itong dalawang two optional exemption na nabanggit natin, the short-term lease and the low-value lease? It's because ayon sa ating new standard ay although nag-qualify itong underlying asset as operational lease, at kahit siya ay ma-identify mo whether short-term lease or low-value lease, pwede mo pa rin gamitin yung finance lease model kasi ito yung ating default. How do we measure the right of use asset? Okay, before that, a right of use asset is defined as an asset that represents the right of a lessee to use an underlying asset over the lease term in a finance lease. IFRS 16 provides that the lessee shall measure the right of use asset at cost at commencement date. Dito pumapasok yung basic journal entry na we debit right of use asset and we credit lease liability. And to compare naman sa ating operating lease model, hindi nire-recognize yung right of use asset. Rather, ginagamitan ito nung basic journal entry na tinuro sa atin sa ating basic financial accounting and reporting na subject, which is we debit rent expense and we credit cash. So, dito pumapasok yung concept na talagang nirerentahan mo lang siya for a period of time. And after knowing the initial measurement of a right of use asset, ano ba yung mga included dito? Okay, we have 4. The first one is the present value of lease payments or the initial measurement of the lease liability. Next is the lease payments made to lessor at or before commencement date, such as lease bonus less any lease incentives received. Next is the initial direct cost incurred by the lessee, and lastly, estimate cost of dismantling, removing, and restoring the underlying asset for which the lessee has a present obligation. Lease incentives, ito naman yung mga dapat na ma-deduct sa cost of right of use asset, okay? Lease incentives, these are the payments by the lessor to the lessee associated with the lease or the reimbursement or assumption by the lessor of the cost of the lessee. It should be deducted from the cost of the right of use asset, gaya nga ng nabanggit ko. In this slide, pag-uusapan naman natin kung ano yung mga hindi included in the initial measurement in the cost of right of use asset. So, ito yung mga leasehold improvements and security deposits. Subsequent measurement of right of use asset is to apply the cost model. It is when the carrying amount is adjusted for any remeasurements of the lease liability and the right-of-use asset at cost less any accumulated depreciation and impairment loss. Right-of-use asset is presented in a separate line item in the statement of financial position, or alternatively in the appropriate line item within which the corresponding underlying asset would be presented if owned. For the depreciation of right-of-use asset, there are actually two following conditions. The first one is the lease transfer ownership of the underlying asset to the lessee at the end of a lease term, and the lessee is reasonably certain to exercise a purchase option. And for our next subtopic, Ms. Aukay will discuss the measurement of lease liability.
We'll discuss measurement of lease liability. International Financial Reporting Standard 16, paragraph 26 provides that at the commencement date, the lessee shall measure the lease liability at the present value of lease payments. Lease payments shall be discounted using the interest rate implicit in the lease, and the lease payments are not paid on the commencement date. So, sa point of view ni lessor, meron siyang ibibigay na property kay lessee. So, since this is a finance lease, the owner of the property is now lessee. So, syempre, kailangan equal, di ba? Kung magkano yung ibinibigay ni lessor, yun din yung kailangan na value na matanggap niya from lessee. So, since the property is an asset para kay lessor, ang measurement nito is fair value. At syempre, bago ibigay yung property ni lessor kay lessee, meron pa siyang dagdag na gastusin. And that is initial direct cost. So, dapat nga equal, di ba? So, ang ibibayad ni lessee kay lessor ay lease payment. But, yung lease payment, hindi siya mangyayari now. Sorry. Hindi siya mangyayari now, unlike yung fair value of the asset given and yung initial direct cost. Bale, ito ay now, pero yung lease payment, later pa. So, ibig sabihin, ang lease payment is at present value. So, anong rate ang gagamitin para i-convert ang present value? That is the implicit interest rate. Siyempre, kung ano yung kanyang ibibigay at kung ano ang kanyang matatanggap ay dapat equal lang, di ba? So, since magkaiba nga yung time nung pagbigay ni lessor at ni lessee sa isa't isa at yung later nga yung kay lessee, mas mataas ang value ng lease payments since present value yon. Alam niyo naman 'di ba na mas mataas yung value bukas kaysa ngayon, 'di ba? So ang tawag kapag nagkaparehas na yung value, yun ang implicit interest rate. So if medyo magulo, ito na lang yung meaning. Interest rate implicit in the lease, this is the interest rate that causes present value of the lease payments and the unguaranteed residual value to equal the fair value of the underlying asset and initial direct costs of the lessor. But if the interest rate implicit is not available, incremental borrowing rate of the lessee is used. So, incremental borrowing rate of the lessee is the rate of interest that lessee would have to pay to borrow funds necessary to obtain a similar asset over a similar term and similar security. So, example, mangungupahan ka, di ba? And magko-compute ka for present value. Magkakaroon ka ng hypothetical assumption na if hindi mo naman uupahan yung property at bibili ka na lang at uutangin mo na lang sa labas yung property na katulad nun, kung magkano yung interest rate kapag binili mo, yun din yung gagamitin mo na interest rate para dito sa lease payments, which is yun yung incremental borrowing rate of the lessee. So now, what is the unguaranteed residual value and what is the residual value guarantee? Residual value guarantee is the guarantee made to the lessor by a party unrelated to the lessor that the value of an underlying asset at the end of the lease term would be at least a specified amount. While unguaranteed residual value is the portion of the residual value of the underlying asset, the realization of which by the lessor is not assured or is guaranteed solely by a party related to the lessor. This means na syempre, hindi sa lahat ng pagkakataon sa leasing meron tayong transfer of title or purchase option. And rather, may pagkakataon na kailangang ibalik yung property ni lessee kay lessor. And minsan, si lessor nagdedemand siya kay lessee na kapag ibabalik na sa kanya yung property pagkatapos ng lease term, merong amount or value yung property na yon na makukuha niya o na mababalik sa kanya. And that is residual value. For example, pinaupahan ni lessor kay lessee for 1 million pesos, isang bagay. Meron kayong usapan sa simula pa lang na ang fair value nung property na yon after lease term ay 200,000 pesos. Pag sakaling hindi 200,000 pesos yung fair value, kailangang bayaran ni lessee kay lessor yung kulang. So, magbibigay ako ng example para sa residual value guarantee. So, ayun nga, 200,000 ang sinabi ni lessor na dapat value ng property, pero 180,000 lang ang naging fair value nito at the end of the lease term. Basta sinabi ni lessee na dadagdagan niya para maging 200k, ibig sabihin guaranteed ang fair value. If sinabi ni lessee na at the end of lease term, dadagdagan niya ng 20,000 para maging 200,000 ang fair value ng property, guaranteed ang fair value. But if unguaranteed, kung ayun nga, nagkulang yung fair value ng property, pag unguaranteed, hindi pala si lessee ang magbabayad ng kulang. Rather, yung other party. Ibig sabihin, hindi guaranteed na si lessee yung magbabayad ng kulang. And also, remember, yung measurement ng lease liability, hindi kasama sa computation nun yung unguaranteed residual value since hindi naman yung lessee ang magbabayad dito. Tandaan na pag kinompute ang implicit interest rate, kasama si unguaranteed residual value doon. I will also define what executory costs are that you will encounter in this chapter. Executory costs are ownership expenses such as maintenance, taxes, and insurance for the underlying asset. These costs are expensed immediately when incurred. So now we will discuss components of lease payments. These are the payments for the right to use the underlying asset during the lease term. So the first one is fixed lease payments. These are the payments made by the lessee to the lessor for the right to use an underlying asset during the lease term. So just remember, fixed. Sunod, variable lease payments. These are the payments made by the lessee for the right to use the underlying asset during the lease term that vary because of changes in facts or circumstances occurring after the commencement date other than the passage of time. Letter C. Exercise price of a purchase option. Ito yung kapag you are reasonably certain that you will buy the property, idadagdag mo na siya sa lease liability mo, sa lease payment mo. Letter D. Amount expected to be payable by the lessee under a residual value guarantee. And lastly, termination penalty. Next, we will define what lease term is. Appendix A defines it as a non-cancelable period for which the lessee has the right to use the underlying asset together both of the following. A. Period covered by an option to extend the lease if the lessee is reasonably certain to exercise the extension option. Letter B. Period covered by an option to terminate the lease if the lessee is reasonably certain not to exercise the termination option. A lessee shall disclose the following for the reporting period. Number 1. Depreciation charge for the right of use assets by class of underlying asset. Number 2. Interest expense on lease liability. 3. The expense relating to short-term leases excluding the expense relating to leases with a term of 1 month or less. 4. The expense relating to low-value leases excluding the expense relating to low-value leases with term of 1 month or less. 5. The expense relating to variable lease payments not included in the measurement of lease liability. 6. Income from subleasing right of use assets. 7. Total cash outflow of use assets. 8. Addition to right of use assets. 9. the carrying amount of right-to-use assets at the end of the reporting period by class of underlying asset. And lastly, short-term leases or low-value leases accounted for as operating lease. Moreover, a lessee shall disclose additional qualitative and quantitative information about leasing activities necessary to help users of financial statements to assess the effect of leases on financial position, financial performance, and cash flows. Number 1. The nature of the lessee's leasing activities. Number 2. Future cash outflows to which the lessee is potentially exposed that aren't reflected in the measurement of lease liability. Variable lease payments, extension option and termination option, residual value guarantee, and leases not yet commenced to which the lessee is committed. And number 3, restrictions or covenants imposed. In transferring the title to the lessee, we have here an example. On January 1, 2021, an entity leased a machinery for 4 years, which is the same as the useful life of the machinery annual rental or fixed payment of 100,000 pesos payable at the end of each year. The lease provides for transfer of ownership of the underlying asset to the lessee at the end of the lease term. To compute the present value of annual payment of 100,000 pesos for 4 years, we will use a 12% implicit interest rate. So present value is equal to annual payment times present value of an ordinary annuity of 1 for 4 years at 12%. Thus, 100,000 times 3.0373 is 303,730 pesos. You guys can see the formula that we use to compute the present value of an ordinary annuity of 1 for 4 years at 12%. But you can also derive it from the mathematical table of present value and annuity. To record the finance lease at the commencement of the date of the lessee, we will debit right of use asset for 303,730 and credit lease liability for 303,730 as well. And if the lease transfers ownership of the underlying asset to the lessee at the end of lease term, the depreciation is based on the useful life of the underlying asset. Thus, to record the annual depreciation of the right-to-use asset, we will debit depreciation for 75,932 and credit accumulated depreciation for 75,932. Present value, which is 303,730 times 4 years, is 75,932. We will now discuss accounting for fixed payment. The annual rental shall be treated as payment for the principal lease liability and the interest thereon. The interest is the difference between the face amount of gross fixed payments of 400,000 pesos for 4 years and the present value of 303,730, which is 96,270 pesos. The interest is recognized as an expense over the lease term following the effective interest method of amortization. We can now see the table of amortization, but how did we come up with these numbers? The payment is the annual rental or the fixed payment, which is 100,000 pesos. The interest is equal to preceding present value times interest rate. So for December 31, 2021, we will multiply 303,730 to 12 pesos. Thus, we have interest of 36,448 pesos and so on. So for principal, we will deduct portion of rental payment to interest. So for December 31, 2021, we will minus 100,000 to 36,448, and thus the principal is 63,552 and so on. Then, present value is equal to balance of the lease liability minus annual principal payment. Thus, on 2021, 303,730 minus 63,552 is equal to 240,178. So now we will journalize. So, December 31, 2021, we will debit interest expense for 36,448, lease liability for 63,552, and then we will credit cash for 100,000. Then, on December 31, 2022, we will debit interest expense for 28,821 and lease liability for 71,179. Then, we will credit cash for 100,000 pesos. If a statement of financial position is prepared on December 31, 2021, the right of use asset will be reported as a separate line item under non-current assets. So we will deduct right of use asset to accumulated depreciation for us to get carrying amount. So 303,730 minus 75,932, we will get 227,798 as our carrying amount. Then, the lease liability will be reported as partly current in the amount of 71,179, which we already paid in 2022, and partly non-current for the remaining of 168,999. Here's an example for certain purchase option. On January 1, 2021, Lessee Company leased a machine with the following pertinent information. Fixed rental payment at the end of each year for 1 million pesos. Lease term for 10 years. Useful life of machine 12 years. Incremental borrowing rate 14%. Implicit interest rate 12%. Present value of an ordinary annuity of 1 for 10 periods at 14% for 5.216 and 12% for 5.65, and present value of 1 for 10 periods at 14% for 0.27 and 12% for 0.322. Lessee Company had the option to purchase the machine upon lease expiration on January 1, 2031 by paying 500,000 pesos. The lessee is reasonably certain to exercise the purchase option at the commencement date of the lease. The estimated residual value of the machine at the end of the 12-year useful life is 600,000 pesos. For us to get the total lease liability, we will add present value of lease payments and present value of purchase option, and thus the total lease liability is equal to 5,811,000 pesos. Take note that the present value factor applicable to 12% is used in computing the present value of lease payments. 12% is the implicit interest rate. So, if the implicit interest rate cannot be determined, the lessee can use the incremental borrowing rate, which is 14%. So, to journalize, first we will record the acquisition of the machinery under a finance lease. So we will debit right of use asset for 5,811,000 and we will credit lease liability for 5,811,000 as well. Then we will debit interest expense for 697,320 and lease liability for 302,680, and then we will credit cash for 1 million pesos. That is to record the first rental payment on December 31, 2021. So if we already paid for 1 year, we can already deduct 5,811,000 to 302,680 to know the remaining lease liability. So to record the annual depreciation, we will debit depreciation for 434,250 and we will credit accumulated depreciation for 434,250 as well. The asset is depreciated over the useful life because there is a purchase option that is reasonably certain to be exercised by the lessee. The depreciable amount is equal to the cost of 5,811,000 minus the residual value of 600,000 at the end of the 12-year useful life. Thus, we used 5,211,000 to divide it by 12 to have the accumulated depreciation for 2021. Here is the table of amortization. If accounts are properly posted, the table of amortization will show the balance of the lease liability on December 31, 2030 at 500,000 pesos, equal to the purchase option. And so, if we exercise the purchase option on January 1, 2031, which is the lease expiration, we will debit lease liability for 500,000 and credit 500,000. But if the purchase option is not exercised, A loss is recognized equal to the difference between the carrying amount of the right of use asset and the lease liability on January 1, 2031. We can see here that we deducted 5,811,000 to 4,342,500, and thus the carrying amount is 1,468,500. Then we will deduct lease liability of 5,000, and thus the loss on finance lease is 968,500. And now that we know the amount of the loss, we will debit accumulated depreciation for 4,342,500, lease liability for 500,000, loss on the finance lease for 968,500. We will credit right of use asset for 5,811,000. To know the residual value guarantee, we have here an example. But remember that as long as there is a residual value guarantee, there is no more purchase option because the equipment shall revert to the lessor upon the expiration of the lease. So on January 1, 2021, EC Company leased an equipment with the following information. Fixed annual payment at the end of each lease year for 1 million pesos, lease term 4 years, useful life of equipment 5 years, implicit interest rate 10%, present value of an ordinary annuity of 1 for 4 periods at 10%, 3.16987, and present value of 1 for 4 periods at 10%, which is 0.683. So, EC Company guaranteed a 200,000 pesos residual value on December 31, 2024 to the lessor. To compute for the cost of right of use asset and lease liability, we will deduct present value of lease payments, which we multiply fixed annual payment and present value of an ordinary annuity of 1 for 4 periods at 10%, and present value of residual guarantee, which we multiplied residual value guarantee to present value of 1 for 4 periods at 10%, and thus the cost of right of use asset and lease liability is 3,306,470. So here's the table of amortization. So for journal entries, we will debit right of use asset for 3,306,470 and credit lease liability for 3,306,470 as well. That is to record the acquisition of the equipment. Then we will debit interest expense for 330,647 and lease liability for 669,353. And then we will credit cash for 1 million. And that is to record the first annual payment on December 31, 2021. Then we will debit depreciation for 776,617 and credit accumulated depreciation for 776,617. And that is to record the annual depreciation. The asset is depreciated over the lease term of 4 years, which is shorter than the useful life of 5 years because there's neither a transfer of title nor a reasonably certain purchase option. If you are wondering how we came up with 3,106,470 to compute for depreciation, we will deduct lease liability on January 1, 2021 minus the residual value guarantee of 200,000. Thus, the depreciable amount is 3,106,470. In returning the equipment to lessor on December 31, 2024, we will journalize the following. We will debit interest expense for 109,090 and lease liability for 890,910, and we will credit cash for 1 million pesos. That is to record the final annual payment on December 31, 2024. Then we will debit accumulated depreciation, which is 3,106,470, and lease liability for 200,000 pesos. Then we will credit right of use asset for 3,306,470. That is to record the return of the equipment to the lessor. If you're wondering bakit naging 3,106,470 yung accumulated depreciation, that is because nag-round up tayo noong 776,617 times 4. That is 3,106,468, right? So, nag-round up tayo para naging yung 470 na lang. You can see that residual value guarantee is not paid by the lessee to the lessor because the underlying asset, which is the equipment, is simply transferred or returned by the lessee to the lessor to satisfy the liability for the residual value guarantee. Take note that carrying amount of the asset is equal to residual value guarantee. However, if the fair value of the equipment is lower than residual value guarantee, a loss is reported for the difference and the lessee must make up for the difference with cash payment. Yun yung kanina ko in-explain nung unang part. If the fair value of the equipment on December 31, 2024 is only 150,000, thus it is lower than the residual value guarantee, we'll journalize the following to record the loss. Debit, loss on finance lease for 50,000 and credit cash for 50,000 pesos. But if the fair value is higher than residual value guarantee, no additional entry is necessary since there is no cash settlement. So now for initial direct cost, we will use this example. Annual fixed payment in advance at the beginning of each lease year for 1 million pesos, initial direct cost paid 250,000 pesos, lease incentive received 150,000, residual value guarantee 300,000, lease term 5 years, useful life of equipment 6 years, implicit interest rate 8%, present value of an annuity of 1 in advance at 8% for 5 years, for 4.3121 and present value of 1 at 8% for 5 years, which is 0.6806. To learn how to compute the given illustration for initial direct cost, here is Ms. Bondoc to discuss with us.
Before we proceed in journalizing our entries for the initial direct cost, we will have to solve for the cost of right-of-use asset first. So how do we get that cost of right-of-use asset? So magbe-base tayo dun sa given sa ating previous slide. Okay, so for the computation, we will have to add the present value of rentals to the present value of residual value guarantee. So as you can see, we have 4,312,100. So, saan natin yan nakuha? Ito ay 1 million multiplied by 4.3121. I-add natin siya sa 204,180. Ito naman, saan naman natin ito nakuha? So, yung 300,000, minultiply natin ito sa 0.6806. Okay, so meron tayong 4,506,280. Ito yung ating lease liability for January 1, 2021. And then, i-add naman natin siya sa ating initial direct cost of 250,000 and ililess natin siya sa lease incentive received which is 150,000. So, meron tayong cost of right-of-use asset of 4,616,280. In this slide, we have the table of amortization. So, paano natin nakuha itong principal? Nakikita natin ito sa table. Okay. So, principal is equals to payment less interest. So, from January 1, 2021 up to January 1, 2026. Okay, this is our first journal entry for the year of 2021. To record the acquisition of the equipment, we have to debit right-of-use asset 4,606,280. Ito yung nakuha natin kanina sa ating previous slides kung saan kinompute natin yung kanyang value. Next is to credit the lease liability of 4,516,280 and also to credit cash of 100,000. Paano natin nakuha itong 100,000? It is 250,000 less 150,000. Ang next naman nating entry is to debit the lease liability of 1 million and to credit the cash of 1 million as well. This is to record the first payment for January 1, 2021. For our next journal entry for the year of 2021, we have to debit the interest expense of 281,302 and to credit the accrued interest payable of 281,302 to record the accrued interest for 2021 on December 31, 2021. So, itong value nito, makikita natin to na sinolve natin sa table of amortization. Next is to record the depreciation for 2021. We have to debit depreciation for 863,256 and to credit the accumulated depreciation of 863,256. For our next journal entries, we have for the year of 2022, first we have to debit accrued interest payable of 281,302, to debit as well lease liability of 718,698 and to credit cash of 1 million. This is to record the second payment for January 1, 2022. Next entry would be debit interest expense of 223,807 and to credit the accrued interest payable of 223,807. This is to record the accrued interest for 2022 on January 31, 2022. The last journal entry for the year of 2022 is to debit the depreciation of 863,256 and to credit the accumulated depreciation of 863,256. This is to record the depreciation for 2022. Next, we have the unguaranteed residual value. This is our given. We have the annual rental payable at the end of each year of 600,000, unguaranteed residual value of 200,000, payment to lessor to obtain a long-term lease 224,000, cost of restoring the asset as required by the contract of 634,920. Next is the annual executory cost paid of 50,000. Lease term for 6 years. Useful life of equipment of 8 years. Implicit interest expense of 10%. Discount rate for restoration cost of 8%. We also have the present value of an ordinary annuity of 1 at 10% for 6 periods of 4.36, the present value of 1 at 10% for 6 periods of 0.56, and lastly, the present value of 1 at 8% for 6 periods as well of 0.63. Again, we will have to compute for the total cost of right-of-use asset. So, paano ba natin to kinukuha? Again, this liability of 2,616,000 plus the payment to lessor to obtain a long-term lease of 224,000 and the present value of restoration cost of 400,000. Paano natin to kinuha itong present value of restoration cost? We will have to multiply 634,920 by 0.63. And there we have 3,240,000. This is the total cost of right-of-use asset. This is our journal entries for 2021. We have to debit the right-of-use asset, yung kinompute natin kanina, na 3,240,000. And we have to credit the lease liability of 2,616,000 and to credit cash as well of 224,000. And estimated liability for restoration of 400,000. This is to record the acquisition of the warehouse under a finance lease. Next journal entry would be to debit executory cost of 50,000 and to credit cash for 50,000 as well. This is to record the payment for the executory cost. Our next journal entries for the same year would be to debit the interest expense of 261,600, to debit lease liability of 338,400, and to credit cash of 600,000. This is to record the first rental payment on December 31, 2021. And the next journal entry would be to debit depreciation of 540,000 and to credit the accumulated depreciation of 540,000 as well. This is to record the depreciation for the year of 2021. And the last journal entry for the same year would be to debit the interest expense of 32,000 and to credit the estimated liability for restoration of 32,000 as well. This is to record the interest on the liability for restoration costs for the year of 2021. And yes, that's it for our Chapter 10 of Intermediate Accounting 2. Thank you for listening.